What if I told you your business credit card is designed to keep you in debt, while the bank gets richer? Most business owners are getting played by banks without even realizing it. Business credit cards are supposed to help you grow, but instead, they trap you with low limits, high interest rates, and empty perks. Today, we expose how these cards work and what banks don't tell you. I highly recommend getting some business credit cards. However, you need to know what to look out for so they don't do more harm than good. So, what if you could unlock higher limits and better terms without getting stuck? Stick around, because what you're about to learn could change everything for your business. And hey, if you subscribe to our channel, you'll get access to even more insights that could seriously level up your business and financial game. Don't miss out. Why you should never trust banks. Let's be honest, if banks wanted you to succeed, how would they make money? You do everything right. You pay on time, keep your balance low, use your card responsibly, and then, out of nowhere, your credit limit gets slashed or your interest rate jumps. And the crazy part? They don't even tell you why. It's like you're following the rules, but somehow you're still getting the short end of the stick. You pay off your card and your credit score drops. You make early payments and they still penalize you. Why does this keep happening? Here's why. It does make sense, just not in your favor. The truth is, the system isn't broken. It's built that way. U.S. banks made over $120 billion in credit card interest and fees last year alone. You think they're just giving that up? Not a chance. They don't want you to win. They want you to feel like you're winning. That's how big players play the game. They want you swiping that card, borrowing just enough to feel like you're getting ahead, making those minimum payments that keep you from defaulting but never really getting free. You're not building power, you're building profits for them. It's like they hand you a ladder and then quietly remove every third step. You keep climbing, but you never quite make it to the top. And guess what? That's not by accident. It's pre-planned. Secret number 1, the rules are always changing, and they'll never tell you. Ever gotten one of those, your pre-approved emails? Feels good, right? You click through, fill out the form, and then bam, denied. No explanation, no warnings, just no. Or maybe you get the win. You're approved with a solid $20,000 limit. You're thinking, finally, let's go. Then a few months later, you log in and see your limit's been chopped down to $9,000. You didn't miss a payment, you didn't overspend, so what happened? Simple, the rules changed. And banks, they never tell you when they change the rules. One week, they're good with a 680 credit score. The next, it's 720 or nothing. Then it's not about your score at all. Now they care about how many cards you've opened in the last 12 months or whether your industry is high risk. These shifts aren't random. They're calculated, based on economic conditions, risk reports, and profit margins. And you'll never hear about it. You're applying for credit using last month's strategy, while the bank is using today's rules. That's why so many people who did everything right still get declined. Secret number 2, business credit cards aren't really about business credit. All right, here's the tough part. You've done everything right. You've built your business credit, got your DUNS number, opened Net 30 accounts, paid your vendors early, and kept everything on track. You're feeling pretty good, right? Then you apply for a business credit card, and it's a hard no. Meanwhile, someone with a perfect 800 personal credit score and who just started their LLC last week gets approved for $50,000 with no problems at all. It doesn't seem fair, does it? Why does it happen? Because banks don't care as much about your business credit as they care about your personal credit. You've got an LLC? Awesome. A solid payment history? Even better. But if your credit isn't up to par, tough luck. It's frustrating, but it's the game they're playing. So if you want those high-limit business cards, there's one thing you need to do first. Fix your personal credit score. That's the key. Once your personal credit is in good shape, your business credit will actually start to count. Don't stress, though. There are other ways around all of this, and here's the good news. You can get a great business credit card without relying on your personal credit score. There are several cards, like the Brex card, Divvy Business Card, and Ramp Business Card, that look at your business's finances instead of your personal credit. I'll talk more about these cards in a future video, so make sure to subscribe if you want to learn more about this. Next is the part you don't want to miss. Secret number 3, How to make the most of 0% interest promos. We've all seen the promo, 0% interest for 12 months. It sounds like the golden ticket for growing your business, right? When you hear it, you think like, free money to expand my business. Heck yes, sign me up. But here's the thing. While that 0% interest can feel like a great deal, it's not a free ride. The bank is counting on you getting comfortable. You buy what you need, run a few ad campaigns, maybe even expand operations. Everything feels good until, boom, month 13 hits and that sweet 0% APR suddenly jumps to 25%. Now you're facing a mountain of interest that wasn't in your plan. But don't panic just yet. Here's how to use the 0% interest period to your advantage. If you have a clear strategy, that 0% APR can be a powerful tool to grow your business without paying interest up front. The key is planning. Set calendar alerts to remind yourself when that 0% period ends, and make sure you know exactly how and when you'll pay it off. If you're not going to be able to pay it off in time, here's a hack for you. Consider transferring the balance to a low-fee or no-fee balance transfer credit card. This way you can continue to manage your payments without paying those high interest rates once the promo expires. In future videos, I explain in detail which cards have the longest 0% APR as well as the best balance transfer credit cards. Always do your research, and don't fall for the myth that just using a business credit card automatically helps you build business credit. Many of the big-name cards don't even report to the business credit bureaus. You could be making perfect, on-time payments for years, and it might not improve your business credit score. To build business credit the right way, you need cards that report to Experian Business, Equifax Business, and Dun & Bradstreet. If your cards don't report to those bureaus, you might be climbing the wrong ladder. How to beat the banks at their own game. Now here's the good news. Once you understand the system, I mean really understand it, you can use it to your advantage. You stop chasing approvals and start attracting offers. You stop borrowing out of desperation and start leveraging with precision. You stop hoping the banks will help and start making them work for you. Ever heard that famous saying, it's not about working harder, it's about playing smarter? That's how successful businesses grow. So, how do you flip the game? Start with these 5 steps. First, apply when you don't need it. Don't wait until you're desperate for credit. Apply when your business is stable and your profile looks strong. Next, fix your personal credit first. While business credit is important, your personal credit opens the door to better opportunities. Another, build relationships with multiple banks. Don't tie yourself to just one lender. Diversify your options to strengthen your financial flexibility. Also, always have an exit plan. Don't swipe your card without a strategy in place. Know exactly how and when you'll pay it off before the charge even hits your account. Lastly, an important tip is to keep your credit utilization low. Total credit utilization across all your credit should stay under 30%. This doesn't mean every individual credit line needs to be under 30%. For example, if you have a $50,000 line of credit with a $5,000 balance and a business card with a $30,000 balance on a $50,000 limit, your total utilization is still just 30%, even though the utilization of your business card alone is at 60%. This is because your total credit adds up to $100,000, and your total balances add up to $30,000. Keeping your total utilization under 10% is even better for improving your credit score and financial health. But first, focus on making sure you keep it under 30% so it doesn't negatively impact your credit score. Hey, if all this feels overwhelming, just take a deep breath. You're not behind. You're not bad with money. You've just been playing a game without the rule book. But now, you've got the inside scoop. You know the truth, and you understand how the system works. Now you're ready to build something smarter, stronger, and better. If this video helped, made you think, or made you say, "That's me," hit that subscribe button. Not for the algorithm, not for the numbers, but because we're building a smarter generation of entrepreneurs together. And yes, do it for the satisfaction of outsmarting the banks. What surprised you the most today? Have you ever fallen into these traps, or maybe you've already beaten the system? Drop your story in the comments, and I'll see you in the next video.